Welcome to Retirement Decoded with your host, Scott Tucker, where we break down the complexities of retirement planning to give you clear, actionable advice. Whether you're just starting out or getting ready to retire, Scott's here to help you make informed decisions and secure your financial future. Tune in each week as we simplify the process and decode the path to a stress-free retirement. Now, here's your host, Scott Tucker.
Welcome to the Retirement Decoded podcast with Scott Tucker. I'm your host, Scott Tucker. My podcast sidekick is most of the time, all the time really, Associate Advisor Andre Hootie. Say hello, Andre Hootie.
Hello, Andre Hootie.
Andre Hootie, we have a question today from Carolyn. Carolyn writes to the podcast. She says, Scott and Andre, what are the pros and cons of buying a house with cash? And this question goes on and on and on, okay? Andre, let's just stop right there. What would be some pros of buying a house with cash?
Well, you don't have a mortgage.
Also, it makes, if you're in a bidding war and there's a cash offer, or even if you're not in a bidding war, say you're selling your house and somebody shows up, I got cash. Other guy shows up, I'll pay this exact same amount. I need 30 to 60 days to close. They do not have cash.
Yeah, I'm taking the cash.
I might have a pre-approval letter, but the other guy's like, no, I have cash. Do you want it in a shoebox, in a cashier's check? How would you like the cash?
Yeah.
Should we have I was going to say a Brinks truck. I'm like 100 years old, right? So nowadays, the banks don't even have cash.
Yeah.
They do. They say, I have a friend who went to the bank for some home improvements. He was going to pay a contractor in cash. And this gentleman makes good money. And he said, I need $10,000 in cash. He didn't write a note. It was actually his own money, right?
Right.
He didn't have he may have had a gun. I'm not sure, but he didn't display it or threaten it but he had $10,000. He just wanted his cash out of the bank. And they said, we don't have $10,000 cash in this branch. We can have it here by Thursday. We have to order it. He's like, you got to be kidding me. It's like on a Monday,
And you're a bank.
You're a bank. Why do they rob banks? That's where the money is.
Right.
Or it's not.
Not anymore, I guess.
Not anymore. But then I heard recently some news source or another, they said that, I can't remember where it was now, the typical bank branch now only has about $100,000 in cash. It's barely worth robbing at those figures.
It's not worth it at that point. Like, how far can you really get?
I mean, if I'm going to face a federal imprisonment, I need at least $200,000.
Right.
No die packs.
I think I'd need a minimum to be a lot higher.
No silent alarms. So the pros of buying a house for cash is you outbid everybody even if say the house is $500,000 and you say I have $500,000 in cash, the next person says I'll pay $550,000 and I need 30 to 60 days to secure financing and close. Boy, that $500,000 cash even looks awful strong compared to that possible $550,000 2 months from now.
Yeah.
The one thing sounds really iffy.
Right.
Even though it's a lot more money.
Yeah.
$50,000 more.
Right. But something can happen in 2 months and that deal falls through. And what if the economy goes down and the value of your house changes by then?
Yeah.
Right. Could have had cash.
A lot of things. Andre, what are some of the cons of buying a house for cash? What would be a downside of buying a house for cash?
Well, it's I like to think things from the mortgage side. So I think if you can get a decent mortgage rate, then I think the downsides of buying a house for cash is, let's say you can get a 2% mortgage. Well, that's great because you can keep some of the other money invested.
It's a hypothetical.
Very hypothetical. But let's say, but on the other hand, you can also get a mortgage that's 7, 8, 9%, then it's not so good.
Well, I would say rather than, because I'm not a big fan of this arbitrage where we owe money or we borrow money than to hope to invest it to make money, because that's very shaky.
Wishful thinking.
Yeah. And it can work out, doesn't have to work out.
Yeah.
I would put the whole interest rate thing aside. I think one of the downsides of buying a house for cash is now you have less cash. Just kind of keep it really basic. And we're in Chicagoland, and a lot of houses, just a run of the mill house, average-ish house, can easily be $500,000. It can be less, it can be more, depending on where.
Yeah.
But say a $500,000 house and you go pay cash for it, now you have a $500,000 fewer dollars in cash, or liquid-ish, I guess. And we don't encourage clients to keep a $500,000 in cash in the bank just to have cash in the bank either, because inflation and things like that. Anywho, then Carolyn says, she continues, as most do. we have the proceeds from the prior sale. Oh, they sold a house. Okay. We have the proceeds from our prior sale in a separate account, and they will cover 80%. Oh, boy. This is where they have the theys. This is all the pronouns. Andre, you got to be careful with the pronouns, the them, theys, and you got it over here, and I don't know who we're talking about anymore.
You got to get them right nowadays.
Well, you can be whatever you want, Andre. Andrea. So we have the proceeds from the prior sale of our house in a separate account, and they will cover 80%. I think she's saying the mortgage lender will lend them 80%. If Carolyn puts down 20%, then our mortgage lender will lend 80%. I think is what she means. The remainder will come from another account currently in a money market. Money market's just like a fancy name for a checking account. The new house will cost approximately 10% of our total assets. Oh boy, this is one of those algebra deals. 10% of our total assets, and the remaining assets are in non-qualified accounts, not brokerage accounts, Carolyn. So I'm correcting her as I go. She's not liking me already.
No problem.
The house will cost approximately 10% of our total assets, and the remaining assets are in non-qualified accounts, in IRAs, and in Roths. Oh boy. So she doesn't clarify. Is she saying she's going to have to sell out of some of her investment accounts?
It sounds like
that way.
It, yeah.
Carolyn, please go to tuckerretirement.com, get on our phone calendar so we can have a two-way conversation on this. We'll sort it out off of the podcast. Our financial plan, excluding the sale proceeds, seems solid enough with an 80% likelihood that we will have significant money left over at 95. Okay, so she has an advisor, Andre, I think, without saying so as much, but you and I can read through between the lines here. Our financial plan, excluding the sale proceeds, seems solid enough with an 80% likelihood that we'll have sufficient money left over at 95. Said another way, Carolyn, you have a 20% chance that you'll be out of money before age 95. So, Andre, her advisor is using that Monte Carlo analysis.
Which, it's great. It has a lot of bells and whistles, but it's not going to give you 100% certainty to anything. Not
only is a Monte Carlo an old Chevrolet, but also Monte Carlo is another... Monte Carlo gets its name from, like, gambling.
Yep, yeah, it does.
I mean, I know it's also a place.
Yeah, but...
It's in Europe and that. But, so Monte Carlo analysis says that they haven't... I'm going to say this another way, the way it's normally said at Carolyn. Your advisor's Monte Carlo analysis says that you have an 80% chance of success in retirement, but you have a 20% chance of running out of money in retirement. Andre, would you get on a plane that has a 20% chance of crashing?
No.
I want a 100% chance, darn close as I can get to it. We are currently both 60. Oh, here's good information buried in paragraph 4. We are both currently 60 years of age. Oh, boy. Pros and cons of buying a house with cash. For most people, I don't think it makes a lot of sense. Boy, it's hard to say. She didn't say either if they're retired. Andre, we've had folks recently we had a couple that they sold their house without advising us. They said, hey, house for sale, house sold. What? What happened? And they go, yeah, so we're going to want to park the cash, and then like a year from now, we're going to buy something else. But they're going to need financing. They're going to need a new mortgage. They already had a mortgage from when they were working. They didn't owe a ton on it. But now what they got from the sale of their house and then what they're going to pay to get into another house, they're going to, in their situation, they're going to have to borrow some money. They don't have enough sitting around. And they don't have jobs.
Yeah, it's not easy to get a mortgage.
And there's no age discrimination in mortgage lending, but there are income requirements to qualify for a new mortgage. So that concerns me. So Carolyn says pros and cons buying a house with cash. They have proceeds from a prior sale. They can get 80% loan to value is what mortgage lenders call that. So they can put 20% down. The new house costs 10% of their total assets. So it doesn't really mean anything because you didn't tell me what your total assets are. The remaining money will come from a non-qualified account, IRAs and Roths. But if you don't, I thought you're talking about buying with cash and putting 20% down, and now you're saying that you're going to have to raise money from investment accounts. That's really weird. And then you have an 80% chance of success in retirement, 20% chance you run out of money. You're both 60. Any thoughts or suggestions for consideration? Thanks in advance. Carolyn, I think we ought to talk, or you ought to talk to somebody. It doesn't need to be us, but we'll offer you 15 minutes for free. Any podcast listener, 15 minutes for free in the coming week with one of our financial planners. Over the telephone, we'll get your questions answered, your answers questioned, and there's no cost, no obligation. But you can't do all this by the seat of your pants. You can't get this advice from your realtor, just from a mortgage banker, your cousin Fred, your spouse. It would just save you a ton of trouble if we just spent 15 minutes on the phone. We got a couple particulars out of you, and then we could give you better advice. This is scary stuff, Andre.
Yeah, it is. It's I don't know how people do this themselves, quite frankly.
60 years old, and we have a 20% chance of success or failure, and 80% chance of success in retirement, 20% chance of failure. It's crazy.
Yeah, I mean, even with a 90% chance of success, I wouldn't be happy. It's like I want to be. There's never 100% guarantee in anything, with investments, but you can get very close. With whether Monte Carlo or whatever, you can have more certainty that you're going to be okay than what that says. 20% failure. That I'm not happy with that.
Well, I understand. I appreciate people being resourceful and try to do everything themselves. But Carolyn and her spouse are 60 years of age, and this is a big thing, and they don't even have a certainty that they'll be successful in retirement. And then we're talking about houses and stuff. There's a lot here that I would feel better if we button this up, Carolyn. So you get in our phone calendar, tuckerretirement.com, no cost, no obligation, and all that. Oh boy, I think maybe sometimes Andre, we say this at the office sometimes too. Sometimes we worry about people more than they worry about themselves.
Yeah, which is funny.
Like I'm more worried about you than you are.
Yeah,
I don't try to freak you out, but I just let's not make mistakes. We like to have that kind of measure twice, cut once type of thinking.
Yeah, I mean, why have to do it twice or do it over? Or have to figure out how to correct your first mistake?
Well, some mistakes you can never.
Exactly.
I don't want to be heavy with it, but some mistakes you can't recover from.
Yeah,
you make one big goober mistake. And by now, Carolyn, you being 60, I'm in my early 50s. You're old enough now or experienced enough now to know better than to. There's some things you can't get do-overs on. So tuckerretirement.com, and we will talk to you on the next episode of Retirement Dakota with Scott Tucker.
Scott Tucker Solutions, Inc. has a strategic partnership with tax professionals and attorneys who can provide tax and or legal advice. Neither the firm nor its agents or representatives may give tax or legal advice. Individuals should consult with a qualified professional for guidance before making any purchasing decisions. A Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The views and opinions herein are those of Scott Tucker Solutions, Inc. and do not necessarily reflect the views and opinions of AE Wealth Management, LLC. Investment advisory services made available through AE Wealth Management, LLC. AEWM and Scott Tucker Solutions, Inc. are not affiliated companies. Insurance products are offered through the insurance business Scott Tucker Solutions, Inc. Scott Tucker Solutions, Inc. is an investment advisory practice that offers products and services through AE Wealth Management, LLC, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by Scott Tucker Solutions, Inc. are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying ability of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Scott Tucker Solutions, Inc. is not permitted to offer, and no statement made during this podcast shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Scott Tucker Solutions, Inc.